Today, we're going to cut right through all the noise, the thousands of different cryptocurrencies out there, and focus on just one, Bitcoin. And why? Well, because Bitcoin isn't just another crypto. It's really the OG, the foundation of this entire industry. And it was designed from day one to be the digital gold for the 21st century. So let's dive in. First, let's start with a question that honestly affects every single one of us. Have you ever had that feeling you look at the money in your bank account and it just seems to buy less and less over time? You know that $100 today, it doesn't even come close to what it could get you 10 years ago. Well, there's a simple one-word answer for that feeling. It's called inflation. It's kind of like a silent thief that's just slowly but surely eating away at your savings, year after year. But what's really causing it? It really boils down to this concept, fiat money. Now, that's just the official term for currencies like the US dollar or the euro or the yen. Their value is based purely on the trust we have in the government that issues them. And here's the kicker. Those governments can print more whenever they want. And when the supply of money goes up, the value of every single dollar you have goes down. Simple as that. This fundamental weakness in our financial system, well, it was pushed to its absolute breaking point not that long ago. And it was in that moment of pure chaos that a completely new idea was born. Let's rewind to 2008. The entire global financial system was right on the brink of a total collapse. We saw banks failing, governments pushing through these massive bailouts, and for so many people, any trust they had in the institutions managing their money, it was just gone, completely shattered. And this just perfectly captures the mood at the time. When the mysterious creator of Bitcoin, we only know them as Satoshi Nakamoto, launched the network back in January 2009, they actually embedded this exact newspaper headline into the very first block of transactions. It was like a digital timestamp, a permanent declaration of purpose, a real message in a bottle. And Bitcoin was the answer. It was a brand new form of money, one that wasn't run by politicians or bankers, but by pure mathematics and code. It's a system that lets anyone, anywhere in the world, send value directly to someone else, no middleman required. So how does this new system actually protect your value in a way that regular money can't? Well, it all comes down to a concept that's as old as gold itself. Just think about supply for a second. The supply of fiat money, it's effectively infinite. A government can always, and let's be honest, they often do, decide to just create more of it out of thin air. Now contrast that with Bitcoin. Its supply is hard-capped. It's written right into the code. There will only ever be 21 million Bitcoin. Period. That provable digital scarcity is its single most important feature. And what makes the scarcity possible is the technology behind it, the blockchain. The easiest way to think about it is like a public digital record book that's shared and copied across thousands of computers all over the world. Once a transaction is in there, it can't be changed, it can't be faked, which makes the whole system incredibly secure and transparent. And that's why you always hear people call Bitcoin digital gold. Just like physical gold, its value comes from being scarce. But unlike gold, you can send millions of dollars worth of Bitcoin across the planet in just a few minutes, and anyone can verify that it's real without needing some special expert. Okay, so right about now, you're probably thinking, all right, I get it, but what about all those thousands of other cryptocurrencies out there? And that is a fantastic question. So let's separate the signal from all that noise. I mean, just look at this. The sheer dominance of Bitcoin is, well, it's kind of staggering. Out of literally thousands of digital coins, Bitcoin alone consistently makes up about half of the entire market's value. That's not an accident, It really reflects its status as the original, the most trusted, and by far the most secure network. The most important thing to get here is the difference in purpose. See, Bitcoin is designed to do one thing and do it perfectly: be digital gold. Altcoins, like Ethereum, for example, are more like platforms for building apps, and they often sacrifice some decentralization to do that. And then you have meme coins. Let's be real, they're pretty much just for pure speculation. And because of that, their long-term risk profiles are just worlds apart. And history really backs this up. Get this, more than 90% of the alternative coins, or altcoins, that were created back in the 2017 hype cycle, they've already failed. They're gone. They're worthless. Bitcoin, on the other hand, just keeps getting stronger.
So look, this isn't just a theory anymore. This isn't just for tech geeks in their basements. Bitcoin has officially moved from a niche hobby to a globally recognized asset.
I mean, this adoption is happening at every single level. We've seen an entire country, El Salvador, make it legal tender. We have huge publicly traded companies like MicroStrategy holding billions of dollars of it on their balance sheet. And then in 2024, the big one. Wall Street itself gave its stamp of approval, launching Bitcoin ETFs that finally opened the door for mainstream investors everywhere.
Okay, so what does all of this actually mean for you as a long-term investor? How do you approach this new kind of asset with a clear, disciplined strategy? First things first, it all starts with your mindset. You've probably heard this classic piece of investment wisdom before, and it is especially true for Bitcoin. Trying to guess the short-term price swings? It's a losing game. The real power here comes from patience and long-term conviction. So here's a simple 4-step plan. First, just decide on a small allocation. Most people stick to somewhere between 1 and 10% of their portfolio. Second, use dollar cost averaging. That just means investing a fixed amount regularly, which helps smooth out the price swings. Third, store it securely, ideally in an offline cold wallet that you control. And finally, commit to holding for the long term. You really want to think in terms of 4 years or more. And why 4 years? Well, check this out because it's a pretty powerful statistic. At no point in its entire history has anyone who bought Bitcoin and held onto it for at least 4 years lost money. That's a pretty remarkable track record, and it really shows the power of just ignoring the short-term noise and focusing on the long-term trend. So, we'll leave you with this one last thought. The internet created this permissionless global network for information, and it totally changes the world, right? Well, Bitcoin has created a permissionless global network for value. The question isn't really if it will change money anymore, it's how. And what role are you going to play in that transition?